We are so glad to have you all. Thank you all so much for being here. I'm Eva Yazhari, the founder of the Conscious Investor online magazine. And at the Conscious Investor, our mission is to illustrate the potential of impact investing and the possibilities for everyone on this call today of marrying profit with purpose. I'm joined by Stacey Lindsay, the editorial director of the Conscious Investor. Hey, Stacey, great to have you.
Thanks for having me. This is so exciting.
We are also joined by Kim Griffin, the membership engagement manager of Toniic, because today we're going to talk about the big topic of getting started in impact investing. Kim, thank you so much for joining us today.
Thanks for having me. Good to see everyone here.
And before we dive in, I just want to kind of set the stage. We all know that we're living in a time where there's a paradigm shift. It's easier than ever to marry your money with your meaning, but most people really struggle to understand how to integrate impact into their finances. So how do they know if impact investing is right for them? Where can they find the right opportunities? How does it compare to traditional investing or even philanthropy? And so in this segment, we are going to talk with you all and answer your questions, as well as outline approaches, give examples and resources to help you have an impact with your money. So we're excited to share this all with you. And as a reminder, there is a chat function on Zoom. If you're joining us live on YouTube, there's also a chat function there. And we would absolutely love to answer your questions during and after the conversation. So I'll turn it over to you, Stacey, to kick off the discussion. And thank you all for being here.
Eva, thank you so much. And thank you all for being here. And Kim, again, thank you for this. We're excited to start this conversation. And of course, let's kick it off really with the big question. What is impact investing? I think it's an interesting question, of course, because I feel that impact investing is becoming more in the lexicon. You hear people talking about it more, but I think there's still some confusion around it because it's relatively new. So how do you define impact investing?
Yeah, that is a big question. So impact investing is a big term, and as you said, has shown up more and more in different places. And so I think that has caused some confusion. But the benefit of that is that more and more people are asking this question. So, it's really a simple concept that you can have the dual purpose of generating a positive financial return alongside generating a positive environmental and social impact with your investment capital. And so it's really blending these two ideas that have historically been entirely separate, right? That you use your investment capital on one side and the goal is very singular to just maximize profit. And that if you have any left over, you can use that for social good, for environmental work or social impact work. And this is really just a blending of those two things.
And I'd love to unpack that a little bit further of how it does differ from traditional investing, because a question that even I both get quite often at the Conscious Investor is, does that mean if I become an impact investor, doesn't that mean I have to sacrifice things? So are there any sacrifices?
There are not any sacrifices, and there's a lot of data recently that is showing that impact investing does not require any sacrifice alongside the financial returns. And so it is very possible to incorporate social and environmental impact and still generate a positive financial return. Some of our research takes a look at that. We look at our members and how they have invested and how their return expectations have been met or not over time. And what we found is that a very small percentage of our members are not meeting their financial expectations. And they're still expecting to reach market rate returns in most cases.
So we're going to talk about the thing. Is the data. So of course, I know that Toniic, you've done so much research on that, but you can't deny the facts, of course. Thank you, Kim.
Yeah, and we've seen at the Conscious Investor, the Wall Street Journal, Barron's, the FT, and many other financial journals now really acknowledging the fact that ESG is outperforming in a market downturn. And so I know that some of the members of Toniic have expressed that. Are there any examples that you can share with us to make that more concrete?
Well, we have one example that comes to mind is an investor that invests through her foundation, and the foundation actually is in spend down mode. So their goal is to sort of sunset the foundation over a couple of decades, but their hardest challenge right now is getting the money out the door because their returns on their investment side are so high.
Not a bad problem to have.
No.
Exactly.
So for those who are listening, how do they know that impact investing is for them? And how do they kind of start thinking about that?
Yeah, I think impact investing is for anyone who wants their money to reflect their values. So I have a very deeply held belief that if people were aware of all the positive and negative things that their money is making possible, and if they really focused on aligning that with their values to the extent that they could feel proud of what their investments are doing, that we would automatically live in a better world. So I think that's the ultimate, is that we are living in a better world because everyone can be proud of what their money is doing, and we're not there yet.
Yeah, and even if you don't have a large investment portfolio, there are still ways to be an impact investor. Is that right?
That's exactly right. Even if your finances, your largest asset is your bank account, you can still choose a socially conscious bank to work with that avoids fossil fuels or perhaps avoids private prison investments. So there are a lot of options in that arena, and we're seeing more and more options available for people who don't have millions of dollars to invest, but they can still align their capital with their values.
Yeah, I really love the phrase "know where your money sleeps at night," which is, how I've also heard that being described. And then there's also, conscious consumerism and deeper impact in one's life, which I know that many of the 400 members of Toniic are practicing as well.
Yeah, I think once, impact investing, like I said at the beginning, is around marrying these two concepts that have been divorced for, the past, our recent history. And so once you start to combine those and understand how intertwined there are, that journey continues, and you start to realize how intertwined some other things are. Like, how are you allocating how you spend your time, how you spend your purchasing power, how you spend your voice and your networks. There's so much that you can work on aligning, and that's something that we focus on a lot at Toniic. We actually had a virtual event recently where a member shared 8 levers of impact that she's focusing on aligning to her values, and specifically in this context around racial equity.
It's become this really positive trigger word for me, and I use, again, trigger in a positive way, because it's just triggered so many other ideas of how to make an impact, of course, and how to, again, you mentioned time, you mentioned other resources, Kim. And that's the thing. The operative word, of course, is impact. So there's just it stems. There's so many different things that stem from it, which I've grown to really appreciate. And would love to go back to the beginning again and unpack some questions about where do you start? Still, for somebody who maybe is very, very new to this, or they're nervous, or they're really unsure, what are some of the first steps? Even I recently worked on a guide for the conscious investor, which sort of helps people kind of guide them for some resources. Of course, we direct people to Toniic. But Kim, what are your suggestions for advice on getting started, and questions to ask maybe your financial planner?
Great question. So I think we've already touched on really the ultimate first step, which is knowing where your money sleeps at night, or knowing what you own. And if you don't have a sense of that, it's hard to improve it, right? So just looking at who are your banking partners, where are your public investments landing? If you have any private investments, what do those look like? And even incorporating real estate, right? How are you approaching real estate if that's a component of your portfolio? So know what you own, and then you don't have to use any, fancy impact measurement tools. You certainly can, but it doesn't always feel welcoming to people. So I think you can trust your gut. You can look at what you own and say, is this a reflection of what I want to see in the world? And if it's not, then talk to your advisor about that. And don't be afraid to ask the hard questions. I think, the advisor and client relationship is so critical to this effort that we have around moving money towards positive impact. And it can be positive or negative. So I think the conversations there are really important. If you have a financial advisor already, don't be afraid to ask tough questions. I always encourage people, don't be afraid to remind yourself and to remind them that you are the asset owner. It's your money. And I think that a lot of people don't feel comfortable asking the tough questions of their advisors because of the power dynamic there. But ultimately they serve you. And so I think that's a critical thing. So beyond knowing what you own and asking questions around that, I think focusing on the team that you have at your disposal is really critical. And so that looks different for different people. But there are, people in your life that have an influence on where your investment capital goes. And so focusing on having people sort of in your corner that, are values aligned or at least willing to move there with you is a critical component of the journey. We have seen time and time again that our members who have a trusted advisor relationship are able to move more money towards impact and to meet their impact goals much more deeply and much more quickly than otherwise. So that's critical. And I think the other key thing is to just not wait. I think, the impact investing and ESG has come up more and more, as you both have noted, in media, and it can be confusing at times, but it doesn't need to be overly complicated. I think I was reminded recently of this beautiful quote by Maya Angelou: is do the best you can. And when do the best you can based on what you know. And when you know better, do better, right? So an important step for learning and for knowing better is by starting with doing. So just do a little bit and see what happens, and then move forward from there.
Yeah, and you also pointed out that
Stacey, it looks like you've frozen. Okay.
I think we're back. You also pointed out that where somebody is giving philanthropically might be an opportunity to start as an impact investor. So we now have donor advised funds and ways that philanthropic commitments can be recycled, whether they're through a loan or even a repayable grant. So I think that also really stands out when somebody thinks about where to start. They can start thinking about where they're first giving to, and then take that as an on-road to being an impact investor.
I think that's exactly right. And there can be lots of different ways to approach that. I think for people who don't know where to get started, looking at where your philanthropy or even your spending money is already aligned, and then considering if there are investment opportunities attached to that can be a great place to start. And it could be that the nonprofit you've supported years actually needs a low capital loan to build a building, but they're going to be able to repay it with a little bit of interest. So you might be able to support them that for investment capital, but that they might be able to point you to different topic areas for funds that are addressing the same issues with a different strategy through investment capital.
Yeah, and just to recap, because it cut out a little bit, I think bringing up the point that a nonprofit can also take in a loan is an excellent point to think about a starting point. It doesn't have to be a for-profit company all of the time. That could actually be a starting point for impact investing. So I would love to transition to defining values. So I think a lot of people are not even sure what they're interested in, and using the clues of maybe philanthropy or even implicit biases, I think can be interesting starting points to dig deeper and know what might be right for you. But you also pointed out that just getting started now is really important. So is there, when it comes to thinking about how to define values, is there any guidance that Toniic gives its members?
Yeah, so one of the things that we've adopted just as a common language and common framework is the Sustainable Development Goals, which I think a lot of folks are familiar with now, but may not be familiar that those actually were not intended to be used for impact investing or even for philanthropy necessarily. They were really intended for tracking goals at the government level. And to a lot of folks' surprise, the impact investing industry really adopted the Sustainable Development Goals as a common framework. And so Toniic has sort of crowdsourced some ways to reframe those goals into investable opportunities. And we use that as a common framework so that the investment opportunities that we share with our members, as well as the research that we share, is all aligned across those categories, which is a helpful way to understand what are the broad topic areas that matter to you. And then there's also, within those sort of thematic areas, there's also lenses that can be applied across your entire portfolio, regardless of the theme that you're addressing. So gender lens investing, for example, or diversity, equity, and inclusion as a lens can cut across your entire portfolio. So looking across your portfolio, how do you understand the percentage of the fund managers that are women or people of color, and how do you make progress in those areas regardless of what the underlying investments are? So there's a few different ways to sort of slice and dice that work.
Yeah, and you've pointed out in the past that a lot of impact areas are interrelated, sometimes in surprising ways, such as climate and girls' empowerment, or poverty alleviation and climate. So that's an interesting way to dissect one's interests as well. Think about more than one sector.
Yeah, and I think just to add on that, we've seen interesting cases where our members end up at the same investment, but from different priorities. So for example, if someone is trying to align their portfolio with climate goals, they might end up investing in an enterprise that supports girls' empowerment, whereas someone else comes to that same investment with the primary goal of supporting women and girls. And they're, sort of mutually benefiting each other by investing in the same work.
Yeah, well, let's dive into maybe the advice for making successful impact investments. What is the secret sauce for doing so?
Yeah, that's a great question. I think that an important element there, especially with folks who are, getting started, as is in the title of this topic, is to know what you feel comfortable doing and to know where that is a limitation, and then to go beyond that to work with fund managers or other investors who are able to sort of round out your own knowledge. So I think that we've seen a lot of members who are able to co-invest with other members and trust, sort of have a more full, well-rounded due diligence process on an investment because they're leveraging the expertise from multiple people. So, no one can know everything, and there's an increased market of fund managers who can be real experts on either a technical subject or in a particular geography that's difficult to invest in. And so there's a lot of ways to work with partners so that you can go beyond the limitations of your own knowledge. And I think that's a critical step in making successful impact investments.
Yeah, I can certainly attest to the fact that working with others is extremely important. Sharing resources and even due diligence can also help in particular situations where maybe there's a new investment or concept or new business model that one is funding, and also just sharing results. I have to say that not everybody is convinced that ESG is a good place to put their capital. They're not convinced that including environmental, social, and governance criteria will yield better results. And so why would they focus on it or kind of spend time thinking about it a little bit more for their portfolio? But when speaking to others who have had that experience, I think it can be quite powerful.
Agree. And for folks that are still on the fence, there's a lot of recent articles, as you pointed out, in sort of mainstream financial media that is highlighting specifically how ESG, particularly in the public markets, is outperforming the recent downturn in the past 6 months. But at the portfolio level, Toniic is really focused on pushing for more transparency in that area. And that's one of the reasons that we put out public reports based on our members' portfolios. We aggregate and analyze that data so that we can understand across a broad section of investors, how are their portfolios aligned with their values? And at the same time, how are they meeting their financial expectations? So if you go to toniic.com, you'll see some T100 reports that highlight more details there.
I'd love to turn to what role Toniic plays and what Toniic does specifically. If you could tell us a little bit more, I think it would be useful for the folks that are listening to understand the context.
Yeah, absolutely. So Toniic is a membership organization for impact investors. We serve individually accredited investors, as well as family offices and foundations, all who are working to align their capital with their values. And we support members at all different stages across this journey towards impact, is kind of the language that we use. And so some folks who join who are new and are sort of at the stage where they they philosophically understand and want that their money is a reflection of their values, but they don't know where to get started. And so they come to Toniic as a place to learn. We also support members through finding specific investment opportunities. So we have a peer source platform where investors can share funds and social enterprises that they've invested with as a benefit of finding co-investors to sort of magnify their investment there. And then we also support several of our members are sort of pioneers in the impact investing space and have been doing this work since before it was even called impact investing, way before ESG became such a common term. And we support them by giving them sort of a platform for sharing more of what they're doing as a way to give back to the impact investing field as a whole, partially by supporting the folks who are earlier in that journey towards impact.
Yeah, one thing that we've discovered, in our work with the conscious investor, and that I've discovered just interviewing some people who've been in the impact world for the past decade, the priceless nature of having that network. Because as you mentioned several minutes ago, Kim, don't be afraid to ask bold questions, whether you're sitting with your financial planner when you're getting started. And I think sometimes when it's a period of growth and a period of change and you're doing something new and bold, it's really nice to have a network that you can lean on. You can say, hey, did this happen for you? Or how does this look like for you? And those kind of navigating those tricky situations. And I wanted to see if you would shed some light on that too, just the power of having that network that Toniic provides.
Yeah, I think that going back to the transparency that we really value, it's hard to find real examples of what members have actually done. I think that there's more and more out there, but it typically comes from the enterprise that's trying to convince you to invest, right? So it's sort of difficult to get beyond their marketing and to understand what is the real integrity of their impact and what is their true approach. And so one of the exercises, some of the exercises that we do that I think are really impactful is a portfolio deep dive. So we'll have members that will share their theory of change, how it has aligned with their own lives, and then how that sort of has landed into specific investment opportunities. And that's incredibly valuable for all of our members to learn from specific examples of what members have done. And then to be able to ask follow-up questions on why did you make this choice and not this choice? That sort of mentality also is embedded in how we share investment opportunities. So there's lots of places to see a pitch from an entrepreneur raising funds, but what the value that Toniic provides is actually shedding light on the investors that have experience with that entrepreneur or that fund manager and are able to share with peer-to-peer how their experience has been and to share more about what is the real impact that they're seeing, which is, either supporting or refuting the marketing, right? And so getting beyond that marketing is critical.
And I imagine it's fun too. It makes the whole process, you have this growing network of people from you have a membership, 400 plus members in how many different countries?
We passed 25 countries.
That's amazing. Yeah. Incredible.
So it's a global network. It's fun. It's amazing people. They're highly collaborative. And that sort of cuts across everything that we do. One thing that has come up sort of organically is this desire, going back to what I was saying earlier around the importance of having a team and an advisor that can support you in your work towards moving towards values alignment. Toniic has turned into sort of a peer reference network for advisors. And a lot of our members get a huge amount of value from understanding which advisors can support them and how other Toniic members have benefited from their work. And so we're actually working with a separate entity now called Values Advisor, which was founded by a Toniic member. It's a separate nonprofit, but it's a platform that is designed to help people find values-based advisors and strategic consultants to sort of round out their team and ultimately allow them to move more money towards impact. And so I just love that story. There's two of the main organizers for Values Advisors are current Toniic members, and we're able to build on the peer learning model that cuts across everything we do and to apply it in a more structured way towards helping people find financial advisors, financial planners, even other consultants that can help with impact management and measurement, and so really accelerate the work that everyone is doing.
Yeah, and I would love if you could comment on the prevailing thought that you have to be a multi-millionaire or even billionaire to be an impact investor. When you're talking about advisor, I think that also includes some advisors that, you know, manage capital below $100,000. Is that correct?
Exactly. Yes. So you don't have to have millions of dollars to deploy. There's still options for you to find advisors that don't have such a high minimum for supporting impact investing work.
Right. So we have some great questions coming through from our participants. Awesome. I would love to address some of them. And I would love to set the tone for these questions by saying, I think we all believe, the three of us, that we still need champions for this work. We still need more people who are willing to ask important questions about the non-financial impact of money, you know, and what it means to actually have an impact in our world, and the key to really understanding that is. And I want to wrap that kind of statement with saying that what's really stood out to me is the push to be more authentic from Toniic, the push to bring the whole self and to not only think about impact investing through one lens. Like, you know, me coming from Wall Street, I spoke the language of money, and, you know, I actually had to break loose of that language in order to come to the place where I am now, where I feel more free in the expression of my own personal impact. And Toniic has been a driving force for that. So I think our questions a lot of them are some tough questions around, you know, diving deeper in the sector. But I think that I really applaud this group for asking them, because we do need these tough questions and we do need the answers to them. So the first one is around the concept that the outperformance of ESG in the current downturn during the pandemic, although markets have largely recovered as of today, is that because of the elimination of the energy sector? I mean, I have a response, but I'd love to hear, Kim, if there's anything on your end that you're addressing within the Toniic community to have more information about this topic.
Yeah, I think that that's a great question. I think that a lot of the outperformance in ESG can be attributed to underweighting in the oil and gas industry and overweighting in technology. And clearly the COVID shutdown has, you know, really exacerbated the difference between those two forms of investment. So I think that, so the short answer, I think, is yes, that's a huge piece of attribution to the outperformance of ESG in the markets. I think the bigger cultural shift around long-term thinking versus short-term thinking is also important, though. So I think, you know, climate change activists and climate change investors have been trying to get people to wake up for a long time that oil and gas is dying and is not going to be a good long-term investment if we're looking at the next decade of our economy and our global marketplace. And so I think that that's an element too. That sort of mindset shift is harder to get down to the metrics that are measured in terms of the why ESG has outperformed recently. Does that make sense?
Yeah, it does. And another question centers around actually pension money moving into impact investing, and frankly, just impact investing as an asset class. While impact investing is not exclusively one asset class, it's a lens on which one can view all asset classes. It probably, as larger institutions move into the space, will be viewed in that way, in a kind of category or a bucket. And so the question really was highlighting the fact that the Department of Labor has proposed restrictions on ESG investing for fiduciary plans that are subject to ERISA laws, which are labor pension laws in the US. The person who asked the question said it's not relevant for individuals, but it might impact the industry as a whole. I think that, for me, the kind of thinking around this and how larger amounts of capital being restricted from investing in ESG could certainly impact the initial inflows. But what we're also seeing, and I'm sure you're seeing at Toniic, is a massive wave of companies that are instituting ESG and even becoming B corporations and having their own standards for how they behave with regard to social impact, environmental impact, or even governance of their businesses. They're being called upon by the consumers and the other stakeholders in their businesses in addition to their investors. So when we're living in a world where it's not just the investor that is changing the narrative, it's not just the investor that is imposing their views and creating the market, it's the customer, it's the stakeholders, the employees, the communities in which these companies are operating. I don't see that big of an impact, even though these are hundreds of billions of dollars that labor pension funds do invest. Do you have any thoughts on just the wave of companies that you're seeing at Toniic and how they are creating their own market for investors to access?
Yeah, I think you bring up a really good point around moving beyond shareholder primacy, which is the sort of expectation that a company will operate with the sole purpose of maximizing profit for their investors, right? We're moving beyond that. And I think that, the Business Roundtable even explicitly stated this, and sort of the proof is yet to be seen in terms of how that will impact their actions. But we are seeing a shift in terms of thinking more broadly around, who are all the people that are affected by companies' work, like not just their investors, but also all of their employees, everyone that's touched by the supply chain, including the environment and the communities that are affected by that. I think that's a huge point. I also think that, the statement recently from the Department of Labor that is sort of refining guidance on pension funds and in a way it could be seen as restricting their ability to invest with an ESG lens on the pension funds that they operate. But another way to look at it, and a lot of our members look at it, is that ESG is really around maximizing financial performance in the long run. And so it actually is, fits perfectly with sort of the risk profile of a pension fund. So instead of focusing on how is this company going to perform in the next 3 months, how is this company going to perform in the next decade? And how are they using a broader lens to make their decisions based on the long-term sustainability of that company? So, how are companies being smart around what climate legislation might be coming down the pike? And if those companies can adopt them earlier, they're actually going to be outperforming by an even larger margin when regulation comes down to, that impacts the bottom line for those companies. And the companies that we're only looking at the next 2 months are going to be way behind. And so ESG and the way that most, I think, financial decision makers look at ESG is actually around reducing risk for the financial outcomes as well.
Absolutely. And I think shareholders never win out when management teams are short-termist. I think they definitely win when they are long-term, taking a long-term view. So thank you so much for that response. We have a question around diversity in impact investing in the industry, how diversity and culture are reflected, or do they mirror private equity? Would love to hear your thoughts, and Stacey and I can certainly add on to that from some of the work we've done at the Conscious Investor as well.
Is the question around, is diversity in impact investing similar to diversity in private equity?
Traditional finance, private equity.
Yeah. I don't have a specific study that could answer that question with direct numbers, but my sense is that the impact investing industry is probably doing marginally better than traditional private equity in the traditional financial management space, but it still has a long way to go. And I think that's important. And I think has luckily moved to the top of a lot of folks' agendas and their priorities right now. And so I'm hoping that we can catalyze a real shift in terms of looking at incorporating diversity, equity, inclusion across the impact investing industry in a much better way. Speaking from the experience of Toniic members, we've seen a lot of attention, before this year on how are they helping to move the needle in a positive way on diverse fund managers and diverse entrepreneurs. And so that has been a lens and a way that our members are looking at their investment portfolios. But it has been even more deeply catalyzed with, the recent events in the United States around racial equity, and has, rightfully brought that to the forefront of these conversations.
Yeah. is the list of Toniic members publicly available on the website? I think that folks on the line were really curious to know, who are these investors that are walking the talk?
Yeah, so a lot of our members like their privacy. And so we do not publish a list of all Toniic members on the website, although some of our members are, really generous with their time and with their influence. And so if you look through the Toniic website, you'll see lots of examples and quotes from our Toniic members that are that have been involved and have been generous with their portfolio data as well. And so that that feeds the research that we do around portfolio, a portfolio approach to impact investing.
Yeah. I want to thank the person who asked that question too, because that is an incredibly important question. Just one of inclusion, diversity, equity, equality. It's at the forefront of what we're doing at the Conscious Investor, but I appreciate that question very much.
Yeah. And we will be profiling some and having Q&As and articles coming forth with people of color that are running funds, incredible funds. There are a few examples out there that I particularly love. One I tried to invest in recently and their minimum was too high for me, but there are some incredible fund managers out there that are more diverse and don't just reflect the way that traditional finance typically looks and has looked for a very long time. So I want to turn a little bit to diving deeper into how to know what you own. It seems like an easy concept, but if you were to take out your account statement right now, you might just kind of look at some company names and say, oh, okay, I'm invested in Facebook or Microsoft. As rightly pointed out, there's a lot of technology in ESG. And the question also went as far as to say, how does one go deeper than a rating system, like a Morningstar rating system? Does Toniic have any guidance for that?
Yeah, that's a great question. Luckily, we've seen an increase in rating systems that incorporate sustainability and social impact and governance for public companies, and that's becoming more and more available. It still is proprietary information, and so the challenge there is that if you get a rating of an A in environment for a certain company, well, how do you know what that really means? And sometimes it's just really not available to you as the investor. And so that is, certainly somewhere to start, but it's not as transparent as I think people hope it is or could be. To understand how do you know what you own, going back to that question, I think that a useful tool is something that we've developed within Toniic called Toniic Tracer, which helps you understand at the portfolio level what does that look like. So for a lot of people, their investments might be scattered across multiple accounts. Maybe you have an account with one financial manager and then some other money with a different manager, and they're not talking to each other, right? So how do you get that sort of overarching umbrella view of the wealth that you control and that you own? And so Toniic Tracer is a way to understand how that maps to your values. What's special about Tracer and that what we're really excited about is that it actually interfaces with the impact management project impact classification system. So what this is a system that classifies funds as they relate to the impact management project, which is sort of a consortium and a best practice around impact measurement and management. And Tracer incorporates those elements into across your own portfolio. Yeah, there's a lot of detail in all of those things, but I'll leave it at that for now.
Yeah, thank you. That is extremely helpful. And I know that some of the people who are listening also have 401ks or retirement savings, and it's often a question of how to align your retirement savings with your values, if that is a meaningful pool of capital for you. And, I know it can be frustrating when you have kind of limited options with pensions or 401ks, but have you had experience with that at Toniic? Have you been able to guide some of your members to integrate all of their assets, including these retirement plans as well?
Yeah, so retirement funds vary in terms of a percentage of our members' wealth and are not always the largest form of capital. Mm-hmm. And as you said, are often limited by what is on the plan if it's an employee-sponsored plan. And so sometimes what people need to do is sort of take hold of that in a more direct way. In my view, I think that options for 401k accounts are almost like one of the most behind in terms of the impact investing industry. We have we have banks that are socially responsible, and we have mutual funds that are socially responsible, but they're not always allowed on these 401k platforms. And it's a huge limitation and a huge opportunity for growth within the ESG and impact investing space.
I just want to say, I want to tell the story of Mathilde, who is a friend of mine, and she works at Beyond Capital. And she was so determined to align her 401k with her values that she just called and asked. And the answer was, yes, we do have a sustainable option for you. It's just not listed on the online, platform where you select your asset allocation for your retirement savings. So I think sometimes the question is to just ask. Sometimes the question is, the answer is to dig a little deeper and maybe be persistent in your needs and explain why they are important to you as an investor and as a customer of that retirement savings plan. But that was very encouraging to me, that it was available. It just wasn't in the forefront.
Yeah, that's a great example. And I think that there are examples that I've heard of elsewhere where companies respond to their employers or their employees' asks, right? So if a company manages a 401k plan for thousands of employees, they may not pay attention to it until they hit a critical mass of their employees that are asking for it. So I know at a previous employer of mine, I benefited from a wave of employees before I started that had asked for it enough that they added a couple of options that were sustainably managed. And then I was able to sort of put my money where my mouth was and support that fund specifically after it was added to the platform.
Yeah, absolutely. I think that there are probably more options under the surface than we know. So I wanted to just kind of give you the opportunity to share with us, some closing thoughts about how folks can get to know Toniic a little bit better that are listening to this conversation.
Yeah, so our Toniic website is toniic.com, Toniic with 2 I's. And if you're interested in moving down that path of aligning your capital with your values, we'd love to have a conversation to see if membership is a good fit for you. There's an interest form on the website that you can submit, and that will come directly to me or another team member to have a conversation with you around what that looks like. We really do focus on meeting people where they are. So I think, I'd like to remind people that a lot of our most public-facing members are the pioneers that have done the work for years and are now at a different stage of impact investing and how they're contributing to the industry. But they started with asking the questions and moving their money in smaller ways and learn from there to do more. So the public-facing members that we do have are not actually reflective of the general membership. So we focus on supporting people where they are, whether you're really just starting with asking the right questions, or if you're doing work that is advancing the industry as a whole.
And I have to chime in and say that every single person that I've met who is a member of Toniic happens to be the coolest, nicest, most accessible person too, because there's something in the Kool-Aid that everybody's drinking, which makes sense, of course, but just so generous, so open. And it's just so incredible how you've been building and continuing to build this incredible membership across the globe of like-minded people, but again, really genuinely nice people who are, as Eva says, walking the talk. It's really refreshing.
I agree. I've learned so much from being a Toniic member. And in many ways, I think that, are a bit more subtle. Toniic has probably inspired me to start The Conscious Investor, to look more holistically at my life and how to integrate impact into it in a whole self way. So I encourage everybody to go to theconsciousinvestor.co and take a look at our guide for beginner impact investors. There is actually a remaining question around the concept of ESG being included in impact investing. We share our views in a piece on ESG being a part of impact investing, but certainly not the whole solution for impact investors. We believe that it is a very good starting point for somebody with a 401k or with assets that do need to be liquid. It's a good way to toe dip into impact investing and potentially think about how to carve out other parts of a portfolio that perhaps have more funds in them or more private investments, or even more younger companies or growing companies that are making a larger impact than, publicly traded companies. So we have looked at this question around ESG and it not being the panacea for impact investing as a solution. And we've addressed that in the content on our online magazine as well. So I encourage everybody to head over to the consciousinvestor.co, take a look at toniic.com. Kim, thank you so much for being with us. We are so grateful to have you today and for you to share your expertise. Thank you.
Thank you, Kim.
Yeah, thank you both. This has been fun.
Thanks. Take care, everyone.
Thanks for joining, everyone.